show you in this video is something 95% of these platforms that do copy trade will never tell you, and those who trade on this platform that call themselves the master traders, they will never tell you the secrets. And I'm going to be revealing this using the charts, real life charts, to explain this technically, how it works, how you get scammed, and the reason why you keep losing money. But those guys, you copy their trade. Whenever you go to their profile, be it forex, be it crypto, you see that they keep making hundreds and thousands of percentage, but you always lose money. Guys, if you're new to this channel, please make sure to subscribe and turn on notification button. Now, that being said, let's head over to the charts and explain this. Now, the first thing I want you to understand is that trading is risky. So many people always love the easy way. They always want to copy trades from this platform and just put your money there and let it run. That is the adverts that you see on YouTube, on your apps that pop up for forex, a whole lot of them. I don't want to mention them, but the truth is this: that is basically what I'm going to show you right now is basically what happens. And this is why each time they give you this impression that all you need to do just put money in there and go and sleep and wake up and your $100 has become $1,000. That is a pure lie. It doesn't really work that way. There are a lot of things involved, and I'm going to be revealing those to you in this video. Now, what you are looking at right now is the Bitcoin chart, and this right here is the price movements of Bitcoin. As you can see, the price started moving this way, went up, down, and the whole rest of them. Now I'm going to use this price to illustrate how you actually lose money and why these guys don't lose money. Now I'm going to start from this area right here, which is actually, we assume this is where the trader took that trade. Now this green text right here represents the margin or the capital that the trader used in entering that particular trade. Now let's assume that you are entering the trade with this trader. In forex, it might be the same 0.1 lot or 0.2 lot, 0.01 lot or whatever, but let's assume you are using the same type of capital, the same amount of capital starting that trade. And this red one right here, it is you that is copying the guy, and this 100 is the one of the person who you are copying, the master trader. Now let's say this is where the price is, and as you can see, this is the key zone right here, and the master trader, being a trader like myself that he is, will want to place a sell trade, okay, somewhere around this area after seeing this break down, after seeing this breakdown, then a successful retest, wants to place a trade somewhere, a short trade somewhere over here. A short trade somewhere over here. Now, one thing about copy traders is that most of them don't actually use stop losses, okay? Because after all, it is when you make money, that is when they make money from you. So most of them don't use stop loss because it is more like gambling to them, most of them actually. Now let's assume that in this trade there is no stop loss. All right, so this area here doesn't really matter. Now let's say the trader places a trade right here with the hope that, okay, trying to catch this level right here, which is the target. Now the target here, let's say the target here is 4%, a 4% drop, okay, from the entering point. Now this is what normally happens. Now, if, as you can see, the price started going against that trade and started going up. Remember, you both started with $100 at this point. Now the trade, when something happened, maybe a news or whatever, and invalidated this trade, and the trade started going up all the way to this level. Now you start running in red. The guy too, or your master trader, also starts running in red, and the price keep going. Now remember, let's assume you are trading crypto, for example, and let's say your leverage is 25x. I'm giving an example, guys. Now let's say your leverage is 25x, okay, and let's just assume that it's 25x, and you can also correlate that with forex, okay. Let's say 500 leverage or 300 leverage. Let's just assume that. So which simply means that if the price of this the price of that asset, Bitcoin in this case now, goes against your trade by 4%, Now 4% times 25, that is 100%. Meaning if the trade goes against you by 4%, you are definitely going to lose the entire $100, right? Now this now means that if the price touches this level, as you can see, 4% minus 4% against your trade, which is this level, you are going to it's going to be 4%. So 4% times 25x, you are going to lose the $100. Remember, you both started with $100. Now the price started moving this way, went against you, started going, came down, gave you a little hope, but all of a sudden started going back up again. Now at this level right here, at this level right here, at this level right here, all right, which was supposed to be the liquidation area where you are both supposed to lose just above this area right here. Okay, as I inside this box, you still have, you already lost $90, remaining $10. Okay, but this guy, now what he did, or what they normally do at this point, this is the area where the whole magic happens. This is where you lose money, and this is where they don't lose money. So what they do is that they add their margin on this level. All right, they add extra $200, and instead of them to have minus $90 the same way you also have minus $90 right here, what they will now have in their accounts is $210. Now what this does, if you're trading crypto or any other assets, sometimes is that it is going to reduce the average price. Average price simply means the price at which you enter. All right, so now reducing this average price, we give the trader more room in case the markets keep going against that trade. Okay, the market keep going against that trade, which is up like this. Now meanwhile, you who is copying this guy, you only have $100 in that trade. You don't have extra funds to increase your margin, or maybe because you trust this guy because of what you saw on the copy trade platform, that he's making 1000% in a month, in a day. You believe that, okay, that's how he trades, that definitely the market is going to come back to your favor, and you keep getting that hope. Meanwhile, you are actually going to lose this money. So at this level right here, you've lost your entire capital, but this guy is still having $210. Now the market, as you can see, continue moving against. By then you're already out of the market, your $100 is gone. But this guy at this level now, he still has $150. Okay, because he added his margin over here, which brought up the average price and gave him more room, another 8% right here, in case the market continues to go against him. So the market will need to go all the way up to this area by 8% again before he will get liquidated. So this now means that his actual liquidation point is going to be this line right here, but you got liquidated here. But you are copying the same guy, the same strategy and everything, but the difference is this: the margin. They always have backup that they use, that they always have backup margins, but you did not have that. Now, as at this point, you're already gone, you're already crying and shouting that crypto is scam, forex is scam, this is scam, this are that. You don't understand why. But if you go back to that person's page on the copy trade platform, you will see that he actually did close that trade in profit, and I will show you how. Now, as at this point right here, the market now cooled off and started going his way that he initially planned for the market to go. And this is where we now see the market coming back down again. Okay, now as at this point, he's back to his $210. Okay, but unfortunately, you're already out of the market. Then the market will still go down. We now go back to his entry points. Okay, as at this point now, he now has $300, meaning he has gotten back the capital which both of you started with here. Then the $200 he added at this point, he has already gotten it back here. Then he still held that trade, and fortunately for him, the markets started going his way, and that was how he was able to back out this trade. in profit. And as at this point, he now has $400, which is $100 profit from the actual trade plus every other balances in it. So guys, this is basically what happens. Now, this might seem funny to you or unreal, but this is reason why you keep losing. All right, this is the reason why you keep losing. Now, there's another thing I want to show you right here. To confirm what I just claimed. Now I'm going to be using OctaFX for those of us who trade for those of you who trade for it. I'm going to use OctaFX to confirm this thing I just told you right now. Now these are the master traders on OctaFX. All right. As you can see right here, you are seeing 22% gain. Then another enticing thing, which I call a marketing stunt, is this area right here. They tell you that this person has made $8,000 and only lost $1, and you'll be like, oh, let me put $100, let me put $50, and guys, I'm just going to make money like this guy. Wrong, you are deceiving yourself. Now, as you can see, a lot of people started copying him, 3,000 plus. These are just most majority of them don't know what I'm talking about, what I'm showing you in this video. Now let me just prove to you that they actually add margin to beat down their trade and hold it down even when they're in loss. Till they start being in profits, and that is when they start closing their profits, and you see that, oh, they are always winning all their trade. It doesn't work like that. Now if you open the profile of this trader, let's see what actually goes down in the profile of this trader to confirm what I just told you right now. Now, as you can see, as at today, the equity, that's the amount of the balance he has, is $82. Remember, the profile said he has made $8,000, only lost few dollars. Now, there's something I want you to pay attention to, which is this unrealized loss, or call it drawdown. Now, this simply means that at a particular point in time, there was a time when this guy was running on loss worth 3,500, but he did not close this trade. The question is why? How did him or she manage to do it? It is exactly what I just explained to you right now. He added fund on this area when the account was about to wipe off. Now let's see the proof of that. Now, as you can see, these are the trades. Now let's look at the trade. As you can see, these are the trades he's been opening, and they are all in profit, no red. Now let's actually see what's happened in the balance. Now this is the balance operation that shows the deposit and the withdrawal. Now let's look at something right here. As you can see over here, this person deposited $5,500. This is real money. This is not a demo account. 5,500. Now the question is this: in forex, if you trade forex, you understand what I'm trying to say. Why would someone trade 0.01 lot size with an account of 5,500 and he only trades like twice or 3 times in a day? Does that make sense to you? No. So the reason is because there are trades that went, the opposite of that went against him or her, and he had to load the accounts to keep that account running till the markets started coming back to his favor or her favor, as you can see over here. And that is when he now started closing those trades and took out the money. That is why you are seeing this 4,500 withdrawal, 4,800 withdrawal. And at the end of the day, this person is now left with $82. Guys, this is basically what happened in copy trading. This is why I tell you guys that the best thing to do now, I'm going to give you the solution to trading. Listen, let me not tell you a lie. The truth is this: if you really want to trade, there are 2 ways you can do it. You either have the capital or you have the skill. If you don't have those 2, you are going to struggle for months, for years, trying to make $10,000 with as little as $50. But if you can learn how to trade, you grow that $50 gradually. Even if it's $0.2 every single day profit, you grow it gradually, or $100, you grow it gradually. Or you can simply hustle and get enough capital, because if you are copying this guy, for example, with let's say $1,000, and you have $1,000 and you enter this trade $100 here, you can also add $500 right here, okay? And at the end of the day, you are both going to end in profit. So it is either you have the capital or you have the skill. There is no two ways about it. Trading bots, copying trading, these are all marketing. All right, what you see on YouTube, those pop-up you see on Google, these are all marketing. So guys, that is how, and that is why some of you lose money in copy trades, but you still go back to those profiles of these guys and you see them making money. Guys, if you love this video, if you love what we do right here at Online Money Minds, please subscribe, share, comment, and tell me what you think about this video and those updates. Till next time, it is God bless.